Hi, I'm Jimmy. In this video, we're looking at AutoZone, ticker symbol AZO. The goal of this video is to try to better understand AutoZone's business and then see if we can come up with a fair value for AutoZone stock using a discounted free cash flow valuation technique. Okay, so let's jump right into their business. So AutoZone is a retailer of replacement car parts and accessories. They generate a large piece of their business by selling to the do-it-yourselfer, and they sell their products both in brick and mortar stores and online. Now, overall, it's likely that AutoZone's in a decent position over the long run because many times cars are lasting longer and longer, and naturally, this would lead to additional repairs, even if those repairs are just regular maintenance, simply because many cars today last longer. They're built at a higher quality than they were many years ago. To illustrate that, this is a chart of the average age of cars going all the way back to 1995, according to R.L. Polk. And they're part of another research firm if you're curious who they are. And as we could see, this has been drifting higher and higher. And like I said, this is likely to be a reflection of better quality cars, better quality parts. But either way, this is likely to lead to an increase in maintenance, and that should ultimately help AutoZone. Along those same lines, the Federal Highway Administration puts out a miles traveled indicator. And as we can see, broadly speaking, this has been trending higher. Sure, it's quite volatile, but a lot of that's a seasonal thing. But the overall trend seems to be a good thing for AutoZone and companies like it, as more miles are likely to lead to more repairs. Okay, that being said, let's take a real quick look at some of their numbers. Then we can see if we can come up with a fair value for AutoZone stock. Okay, so this is a chart of AutoZone's revenue going back to 2003. And you may notice that it has been impressively consistent. And I just want to point out that in this time period here, well, this is the Great Recession. And if we're curious, from the start of 2008 to the end of 2009, AutoZone stock had a total return of more than 31%. So this supports our belief that AutoZone and similar companies tend to do well in tough economic environments. That's one of the perks to this type of company. They tend to do well when the economy goes bad. Okay, now let's look at their net income. And once again, AutoZone's profits have grown rather consistently. Now, we do see an extra little jump here in 2018. That's from some tax adjustments that occurred after the US had some tax law changes. But overall, it seems that profits are heading in the right direction. Now, this brings out that most of their revenue is generated in the United States. This is a chart of the number of stores that they have going back to 2002. And then we can switch that. Now it's showing US versus international locations. And clearly, the US stores are dominating the store growth. But their international presence is also improving, which is likely to keep the door open for some additional growth over the next few years, which once again looks like it could be a positive thing for AutoZone. Okay, now before we jump into trying to calculate the intrinsic value of AutoZone stock, I just want to make another point that I think could be meaningful, and that is the falling price of oil. Or really, at the end of the day, it's the falling price of gasoline. And as we can see from the gas price over the past year, it's been drifting lower. Now, my thought process with this is that I would think that lower gas prices could lead to more miles being driven, which should also lead to more repairs on cars. And that should therefore lead to improved numbers for AutoZone's, either in revenue, profits, ultimately their stock price. Now, it's very possible that lower gas prices are a temporary thing, so I don't want to lean on this too heavily, but I did want to bring it out as a potential positive for us to consider. And then something for us to consider on the negative side. Well, when we think about the virus that's been dominating the news recently, the question I found myself asking was, has there been any inventory issues due to the manufacturing issues in China or any other parts of the world where they may get parts from? And based on the most recent earnings call, to this point, I haven't heard of any noticeable holdups for the company. So overall, it appears that AutoZone is in decent shape from a impact on manufacturing so far, and this is likely to be a good sign for AutoZone stock. Okay, now let's jump into the fair value of AutoZone stock using our discounted cash flow valuation method. Now, I'm not going to go into too much how I do this whole calculation. I've got a whole video on this topic if you're curious. I built an Excel spreadsheet template. You're welcome to have it for free. There's a link in the description below. You can sign up for that. I'll email it over to you. There's a link below if you're curious. But basically, what we have is analyst estimates of free cash flow. That's where these numbers come from. And then we discount those numbers by a required rate of return of 7.5%. Now, I've actually been using 8.5% for a required rate of return for most of my discounted cash flow calculations over the past year or so. But interest rates have fallen so much that I think it's only reasonable to lower our expectations of a reasonable required rate of return. If you're curious, I talked about this more extensively in a video that I had done after one of the big stock market plunges. So if you're curious, there's a link below to that video. But either way, we ended up using a 7.5% required rate of return. And I used a perpetual growth rate of 2.5%. That's been typical. And this gives us a fair value of the company of about $31 billion. Then we divide that by the shares outstanding, and we end up with a total fair value of AutoZone of about $1,325 per share. And when we switch over to AutoZone's stock chart, well, we can see that this puts their fair value, according to our DCF calculation, right up here. So, is AutoZone a good buy right now? Well, as I mentioned before, there are certain companies that are pretty good when the economy heads downhill. And this has been, historically, one of those companies. So given the current situation, I think that's a good thing. Plus, if we do buy down here, it does seem to be trading below our calculation of the intrinsic value right now, which is another positive sign. So whether or not we buy now really depends on how much margin of safety we look for when we go to buy a stock. If it's very possible that AutoZone's right there right now. Now, you may have noticed that I didn't discuss AutoZone's debt in this calculation of fair value, and that's mostly because I think that AutoZone has a very reasonable amount of debt, and therefore I'm comfortable with calculating the value of their overall company and using that to come up with where we should try to enter the stock at. Now, if you're curious about analyzing the debt of AutoZone, or any company for that matter, I actually did a whole video on that topic just recently. And if you're curious, that could be a good next video for you to watch. There's a link right here. There's a link in the description below. Thank you so much for sticking with me all the way into the video. I really appreciate it. Thanks, and I'll see you in the next video.